Hi, my name is Louise Mowbray, and I'm here today with Gina Clifford, and together we are in conversation with Rob Tyrie. Welcome, Rob. And Rob is co-founder of a think tank that we all belong to, the Grey Swan Guild, and is very much involved in insurance. And today, of course, we're discussing AI more broadly, and specifically today, insurance. Hi, Rob.
Sure. Thank you so much, Louise. Gina, it's a pleasure to be here with you. I'm thankful for your work. I'm Rob Tyrie. I am a computer scientist by training. These days, I run an advisory portfolio company with a number of software companies that help them get to the future and get to the market with insurance companies and banking. I've been in insurance for over 25 years, building systems that people use every day. And I've been hoping for change in applying new technology every day with insurance, because strange things happen in our lives. We all have insurance in it.
Absolutely. Gina, your thoughts?
Well, I live in Florida, so insurance is crazy for me right now. There are friends and colleagues of mine that live nearby that cannot get insurance easily. Their homeowners insurance companies have left the state, and they're left with dwindling numbers of options. And then, of course, the prices skyrocket. So it's really scary that more people than ever, probably the city, the Tampa Bay area is one of the hottest cities in the country right now, where more people are moving there than anywhere else. And insurance companies are leaving the state at the same rate. So that leaves for an interesting conundrum. And I'm wondering how AI can help us with that, Rob. What do you think? What can AI do to bring down insurance costs, maybe to make better bets for insurance companies? How does that affect me as a homeowner or as an auto insurer? You know, your angles on that would be interesting.
Yeah, it's a big issue in Florida, California, especially everywhere. There's extreme weather or extreme climate or extreme nature. There are things that are unusual. Unusual in insurance is bad. The idea of insurance is to bet, right? We bet on the industry. Allstate, Farmers, State Farm, all the big companies bet on certain futures. They predict things. When things don't go well in their claims, they've got to assess whether or not they can be in business anymore because they're a private sector. There is no right in America or anywhere to insurance. There's no human right to insurance. Although when there is insurance, over the last few hundred years, we've discovered that it makes things civilized. It saves people's lives. It saves people's families to have insurance. It smooths things out when there are problems. So this bet going on right now, and it's happened before in Florida. Hurricane Andrew in the 90s, late 90s, wiped out there's a massive big front storm across Florida, multiple cities hurt. After that, major companies left the state. And that's not kind of the deal. The social contract with insurance companies, that because they're regulated, is that they insure people. They left. So now it's happening again with these storms. And one of the reasons companies are leaving is because of better predictability, because of AI and storm forecasting. They're sitting around the table saying, you know what? There's too many claims here. We can't charge enough. And in Florida, unfortunately, Gina, is the highest rates of home insurance in the US because of prediction, because of AI.
So what you're saying is that the prices aren't going to go down even with better technology.
Well, here's the rub. As we get better with weather prediction, we get more perfect. So think about this, right? So insurance is about betting against bad things happen based on imperfect information. We don't know what's going to happen, so we get some insurance, and just in case something bad happens, we can make a claim. What if in 10 years, weather prediction is so good, they know where to put the homes. They know that this particular zip code is not going to have a claim in 100 years. Your insurance in that place in Florida will be very, very low, and you'll live there.
So then we'll probably just have to all move to higher ground.
Well, I know there's a company that I was involved with, and they would have their underwriters. These are people that actually calculate the risk, and they provide input. And back then, this is 5 years ago, they would walk the streets and get line of sight. So rather than using technology, they would just use humans to assess the topography, even in Florida, which is super flat as we know. And they just do the topography. And then, yeah, there are these micro places where instead of spreading the risk, you narrow the risk. Now, once you narrow the risk that low, it's just high and low opportunities. But there's a debate going on right now. But I think that within the next 3 years, people will demand insurance because that's part of governance. And I think that tools will get better. But when the tools get better, that means high and low. It means basically some places you won't be able to live. And that goes for California as much as it does for the tip of Spain.
Yeah, I wonder, Louise, are you having any impacts from climate change that might be affecting insurance in the UK or in South Africa?
You're making me think of it. A few years ago, we had severe flooding in the UK, and certain parts of the coast were actually, the cliffs were falling away into the ocean, kind of thing. And various different areas, of course, are in floodplains, and the general feedback is getting your house insured is pretty difficult, and in terms of premiums, etc. So would you rebuild a house that had been destroyed in a floodplain, or would you sell it at a loss and move somewhere else because the chances of it happening are greater and greater? And I think that this question of AI and the ability to actually predict all sorts of factors. Climate change is, of course, a major one, but I'm not sure how great we're going to be at predicting the weather, simply because climate change means it's unpredictable, right? There's not a lot of past to go on, but perhaps I'm heading off on the wrong track there. Perhaps we'll be able to read it, but it'll be short-term readings rather than 5-year readings or 10-year readings or 20 or 50. I think that I cannot imagine that one would be able to predict catastrophic climate change and the impact on various different places over the long term, except, of course, that we know that the sea level's rising, and we know that coastal areas will be affected, and we know that people will shift inland over time anyway, if this continues. So, there's that general movement. But down to specific areas or properties, I don't know how easy that would be to work up. Perhaps I'm wrong, Rob, tell me.
Well, I know that if you look back in our past, weather, if you think like I'm 59 years old, so weather, when I was a kid, weather reports, we would joke about it. Yeah, the weather is classic. It's only right about being wrong. What has happened, especially in the last 10 years, is more and more investment in more and more science and technology, and then fundamental computing. Like right now, the leading edge of artificial intelligence is being applied against weather forecasting. And if you look at some of the other things that go along with AI, is like, where does the data come from? The satellite network that's being exposed around the world, this is something we didn't have 20 years ago at all. If you look at 20 years ago, the number of satellites in the sky, you'd think there was a lot, but there was not. So now thousands and thousands, and that's the sensors. And now we're applying quantum computing. Quantum computing is a new area of measurement that is related to prediction, like AI is related to prediction. So we're actually today getting the best forecasts 5 years out than we've ever had as humans. And it's hard for people to see that.
So Rob, how are we tying that to insurance? Are you saying that insurance companies have access to the outputs of some of these AI models that, on the leading edge or the bleeding edge of weather forecasting? Are insurance companies able to get that data in a way that they can contextualize for risk?
Yeah, you're seeing it now. One of the reasons that the majors are leaving Florida because of forest fires are because of predictions based on AI models that say that, the risk has changed. This is not a 100-year incident anymore. This is every 5 years. And the actuaries will show up and go like, this happens every 5 years. Well, we have to change the rates. And then there are rules about changing rates because it's regulated. And this is as much in Europe as it is in America, as much as it is in Asia. You can't change your rates, but you can choose not to offer insurance. So it's something shifting, and it's because of better models.
Wow. So AI is actually working against the homeowner in Florida right now, or in California, or in places where it's too risky for insurance companies to do business there, is what you're saying.
Yeah, well, think about a long time ago, 5,000 years ago, if the weather changed and you were a nomadic tribe, you would move. So what's likely going to happen is there'll be very safe places, just like risk happens like, okay, well, Miami, dangerous because hurricane, right? But if you look at some other places on Earth, it's like there are no hurricanes. There's just none. So, but we don't have cities there, and we don't have infrastructure there. So that's the problem, right? So, and whether if you're a 300-person tribe moving around, that's different than say, okay, well, there's 7 million people here, and it's too hot to live,
Yeah.
or too dangerous to live, and it's a harder construct on what do you do.
I'm curious.
I'm sure, I'm 100% sure there's a map somewhere that has this where the city should be for the next 100 years, given risk.
So do you see any insurance issues with organizations that come in and build resilient buildings, or?
Oh, wow, good question.
I don't know. Is that part of what you have knowledge of? You know, if you're building something that's meant to handle a 200-mile-an-hour sustained wind force.
Yeah.
Yes. What about the building in Saudi? Is it 2-3 kilometers long that's built in the desert? It has its own ecosystem, etc. Yeah.
Well, it's a great question, right? So there's this problem of like, we can't move because they've got this infrastructure. Well, what if you assume we're not moving? Okay, what's the worst that can happen? 300-mile winds, 45-degree temperature, 2 different areas, right? And you guys are absolutely right. You're feeling it. It's like, yeah, one of the responses is like, let's make sure, and we've got building codes where houses don't fall down. And insurance gets involved, insurance companies get involved in that, like, hey, you should have this kind of building code because you have this kind of risk. And sure enough, my part of my heritage is from Jamaica. And in Jamaica, they build houses out of cement and rebar. And they're designed for 300-mile-an-hour winds. So they don't fall down or they break, they're resilient. Parts break, but the whole thing doesn't fall down. Right. People don't die. I worked for a company based in Tel Aviv. Here's an extreme example of risk. If you have a building in Tel Aviv and it's a skyscraper and you're above a certain floor, you must have 2 bomb shelters. That's extreme risk, right? So it's predictable. Bad weather, bombs, very extreme. Okay, you can't have a building unless there are bomb shelters because it's too risky for people to work there. And sure enough, there's 2. I've worked on this floor. There's 2 shelters. You hear an area, you go in the bomb shelter. So the same thing with homes. You can actually build them. Now that's more expensive because now you're managing risk. But the question for society, is it less expensive than putting people out of their houses or paying for a house to be rebuilt every so often? And there we're back in the casino of insurance.
Wow.
So interesting. Gosh, my mind is buzzing.
Well, sorry about the extreme example. We went from houses and normal everyday things to war. And there's actually political risk and there's war risk. So if you buy a commercial, if we take it up to commercial insurance, you can buy these policies. And that's part of my area where I'm really interested in insurance and changing the world is extreme commercial insurance, kidnap and ransom insurance, political risk. These types of insurance are possible. If you have an enterprise and it's multi-country, and if you're doing work in Colombia or work in Africa, there's a way of managing risk. You could call the former Blackwater and have security guards, or you could call other companies that specialize in risk and they'll arrange risk management for you.
So how does AI fit into that, Rob? How does AI fit into that kind of risk management? I'm curious.
Yeah, so in risk management at that level, it's about scenario planning and using historic risk of movement of certain information that will cause certain problems. One of the big ones I would say, which is being tailored into commercial insurance like this at this risk management level, is news and news sentiment. So they process the news because now it's proactive, right? So if you have an insurance policy with one of these big multinational insurers that's dealing with political risk, it is better if there are no claims. Therefore, you're proactive about it. Part of your insurance policies are risk management services. So rather than going to a country that's risky, that might have revolution or might have instability, say you've got an oil well in Niger right now, rather than waiting for something bad to happen, you send security guards because you've been watching the sentiment, or you cancel flights. So that's an extreme example, but part of AI would be to assign or assess sentiment in news to predict risky areas and have a map show up that says, okay, well, these are the cities where we have policies, and this is where the risk just changed. And then you act proactively. So the traveler would get, so Louise would get a notification on her cell phone, flight canceled from ABC Insurance Company. And you're like, wait, what, why? That time you travel, Louise.
It makes me think of, I remember when I first started working, of course, we had key man insurance. I mean, key person insurance today. And the other thing is, of course, living in the Middle East, I just remember the extent. So it wasn't just a security firm. It was a whole range of factors around various different senior level executives in the region. And same would apply in Africa or anywhere else that's considered high risk for whatever reasons. But looking at the AI side of things, I would imagine that today we've got so many more ways of feeding information into a risk management system. So, from drones to, as you say, satellites. I just see in Scotland, they're looking at, I think, 3 or 4 launch pads for satellites this week. So major shifts around the types of information coming into systems and how it's all used to assess risk. And we were having a little chat before we started, and Gina, you mentioned risk, and Rob, you said yes, most people think of insurance as a direct correlation to risk. So what are the other factors that that AI might enable in terms of this type of evaluation of the situation?
It's a great question, the way you frame things. So if you think about insurance and when it gets enacted, and all insurance companies are split into 2 halves. One half that creates insurance and sells it, the other half that deals with claims and incidents. The back half is post hoc. Something bad happens, claim must be paid or denied. Risk management is moving away from insurance and saying, okay, let's do the pre-hoc. Let's do things now to predict things better, so there's never a claim. So where is AI being applied right now, especially if we talk about generative AI? There's some simple cases that, something that you alluded to, like if you're launching rockets around the world, well, how do you process all that news, all that geosensory information, just so it's just organized? So no prediction, go from A to B. AI is really good, especially generative AI, and that's why the word transformer is in it, to take 10,000 things and summarize it based on some models. That could be a mix of heuristics, humans in the loop, and models to result a result that's consumable, that we couldn't do 20 years ago without AI. And now this has been going on not for a year. There's other deep learning techniques and machine learning techniques that have been analyzed and applied against this underneath the covers that aren't, the public isn't aware about, but that's how you process massive amounts of information. So don't think of it as AI being this mastermind that will be the risk manager, but it could be just the robot that collects, okay, read all the news today. Read all the news from all the satellites that are over these positions. And then process, and then just show me something that's different than it was in the last 10 weeks. That kind of command is a classic AI command or prompt that will derive a really surprising risk management result. But based on this massive, big, imitating brain.
So you're leading me in my mind onto leaps and bounds and all sorts of directions. One is warm data. So it has this ability, or certainly our ability to work with generative AI and other systems. Has it led to, richer warm data, thick data, that type of thing? And how does that impact the insurance business? And I'm thinking specifically around health and genomics and things like that.
big. It's a big open door there on the health insurance side.
Right.
And I've done less of my work in health and insurance than property and casualty. It's a big area. There's a lot of science involved. There are doctors involved, and I'm certainly not a doctor. So I think the biggest advances in health insurance and the structure of data is that compared to 10 or 20 years ago, massive amounts of data. So 10 years ago, no one thought you could sequence a human's genes and put it in a place. And then even when that discovery just closed off actually a couple of years ago, where they've got the complete genome sequenced. So that if you read your insurance policy and you have that information, there's actually, and I watch this all the time, changes in major terms of insurance. Right now, to rate the risk of your life and when you will die, it's pretty well known there's 3 key factors. And these are the questions that you get asked all the time. If you want to buy insurance, there are 3 things. Do you know what they are? Guess what they are? There's 3 things they always ask.
Your age?
Yes?
History, medical history?
Nope.
No. Family medical history?
Gender?
Nope. Actually, no. Gender's not important, but it's like number 2. Close.
Which one? Sorry, I missed that.
Gender?
Yeah, it's close. It should be gender, Gina, but there's bias problems. We'll
Of
talk
course.
after a second about bias. But one is definitely age. Your height.
Really?
Yeah. I'm sorry, there's 4. Your weight
Okay.
and whether or not you smoke. Those 4 things.
Height?
Yeah.
Height
Yeah.
and weight
If you're-
give
if
you
you're- if you're-
BMI, right?
Like, okay,
Yeah.
yeah, okay, so as a ratio, I get it.
And that's a polite way of not asking BMI. Right.
Wow.
So it would be, it's 3 really. It really is about body mass. And I'll be clear, whether you're fat or not. The fatter you are, the sooner you die. So, and oh yeah, by the way, insurance is dark. And when I get clinical, along with all insurance professionals, it's just dark. And these are facts. They've measured this over hundreds of years. The fatter you are, the sooner you die. If you smoke, as opposed to not smoking, the sooner you die. Age, obviously age there is like, oh. And then you can plot the curve of what it costs for life insurance, because that's the bet. When you go get terminal life insurance, you get answer those 4 questions. It'll tell you that that's $5,000 a year. If you are more likely to survive the term of the policy, well, that's $1,000 a year. That's the betting farm that you're in. So it really is like, it's like, wow, 3 things. How can that be right when there's all that other information Louise was alluding to? History, other things, and then gender. Ugh. There should be laws. There should be laws about this. If you've got a gender, you deserve the insurance for you.
Well, that leads us on, Gina, well, wherever you decide to go, but of course, Invisible Woman, Caroline Perez.
Very good.
Yeah, I exactly. I think that going at the data bias, that everything is default male in the past, all data that has been collected medically, vast majority has been male oriented, and sometimes only white males. So it even further limits the viability of that model across other parts of the population. But what I guess where I was going to go with that, because bias is a thing that is a longer term thing to fix.
Yeah.
But I was going in a direction with, so you have these things on this curve, and some of those things you can't change, but some of them you can.
Mm-hmm.
So you can't change your height, but you can change your weight. So if you as a consumer knew that this was the deal with your insurance, and that there was a model, and maybe AI is the coach in this scenario, where you could improve your score by doing certain things and get better insurance coverage. And maybe that is month by month, year by year. So it's not a set, you're paying this and you're being penalized, I guess, if you're a smoker or something, forever. When you're changing your habits. So is that happening? Do you think that will happen? What will it take to make that happen?
This is why you're a futurist, Gina. Your prediction, I think, is very accurate. There's been early days experimentation, and it's a big shift of thinking on what can you do to impact your premiums if you knew more, and can you set up a system that tracks better. I think state of the art right now in mass market would be what Apple's doing again in entering the health business. Apple has tried to enter the health business and wellness business at least 4 times of massive investment and about 3 failures going a long way. This looks like the one that will get them into that world, the Apple Watch and all its magic. Microsoft also has been entering and exiting the health business. IBM enters and exits the health business. It's a very difficult, I call it a business. It's difficult because it's not a business. It's a governance model. It should be. When we try and have the profit construct of making business happen, unusual things occur. Like, I basically believe in the future sugar should be banned. Period. It's a terrible drug. It's awful. It causes diabetes. We know it, and we treat it like Fruit Loops. Sorry, Fruit Loops.
Yeah.
We treat it like candy. It's not candy. It's not good. You know, the same warnings in Canada. Here's a sidebar story. In Canada, there was a massive approach to shift to recording the same type of governance and regulation over sugar that the Canadians have over tobacco, which means that on a package of something that's dangerous for you, there's a warning label of your rotten teeth, of your fat belly, because sugar. They're going to do the same construct. They stopped because that group of regulators in 2018 and 19, or 2017, 18, 19, all got shifted to cannabis. Because Canada legalized cannabis, and cannabis is a drug and it's dangerous. All those people that know how to do this focused on cannabis for 3 years. But the line of sight is going back to sugar. Sugar is dangerous. So back to health and what's going on. Yeah, there are a number of insurance companies that have tried early days experiments of health monitors. You wear this health monitor, and it's the watch, not a health monitor. And then if you have certain goals and you meet certain goals, your premiums go down. Now, there's something called the moral hazard insurance, and moral hazard should be required reading for everybody. Because if there's insurance, there's the fact of moral hazard. People try and game systems. So if you unleash these health monitors, you know that someone's going to do something wrong. Someone's going to game the system themselves. The human will say, oh, I have to be lighter to get a lower premium. I'll starve myself. I'll die. I'm suing the company because you caused this. Moral hazard. It's like, darn. And overall, if everyone just did the right thing, like, feedback loops work. Not for everybody they work, but yeah, there are things coming. I think that there will be benefits, and certain companies today have benefits that are aligned along wellness, and there are programs that are mixed that you can choose to get involved as you like. And then measurement. I'm a computer scientist, right? I don't entertain systems that can't be measured. That's called fiction. So yeah, that's a part of it. Yeah.
Yeah, I've got a scenario for you, and this is a company that exists. So they started as a health insurance company, and of course collected everything's. They have automated systems. It's very easy as a client to process claims directly with your practitioner, and they then started moving into the health side. So if you discounts on top-end gyms, and you get points, you're rewarded every time you go to the gym, certain number of times a week. If you join a running club, you get discounts on your running shoes or your sports gear, I should say, and your smoothies at health outlets, and all of these lovely benefits, which are really enticing. And every year, depending on how many points you gain, you move through different levels until you're at platinum, which means you get a huge percentage off your flights. And, it's really a reward system, an amazing reward system. And then, of course, they do life insurance, they do car insurance, they do every other type of insurance. So the other thing is, they're on your app, and if you drive well, and if you get points for that, and you get cash back. And recently they launched a bank. So if you use all of their credit cards and their, your current account is with them and your premiums go out of it, and every time you put a basket of food or a trolley of food through at checkout, they give you points back or reward, some sort of reward for healthy things that you purchased. And so they know exactly what you're eating. They know where you're going. They know when you get a takeout because you pay for it with your bank card. They know every aspect about your life, how many bottles of wine are in your trolley every week, how many pizza takeouts, how many this, how many that. And of course, now we have DNA, right? So the whole movement in health is towards, understanding, your makeup and your propensity towards certain diseases and life-threatening whatever. So, of course, the promise of DNA testing and is right there if it isn't there already with some companies. So play it forward a few years' time, you put all your eggs in one basket because you get all these lovely benefits, perceived benefits, and you drop dead of a heart attack. And they refuse to pay out your life insurance because of what was in your basket every week, the fact that you didn't go to gym often enough, the fact that you had a predisposition towards certain scenarios. And my feeling around that is don't put all your eggs in one basket. It's so enticing, and that company exists today. They have all of that. It's all tied in. It's immensely attractive, and most people are running around talking about how many points they got or how they got their latest pair of running shoes at 40% off or whatever the case may be. Aren't we just heading in a direction of pure data scrape of every aspect of our lives, Rob?
Yeah, the way you lay it out, it sounded a little Black Mirror-ish, but I support and concur. It's and the company that you know about, I know other companies along the same lines that are offering the trade of you give us full information, you give us full access to your life, we will give you offers to nudge you in the right direction, so we're in cycle together. We know that if we do the right things together on the positive side, you'll have lower insurance rates and better offers and a better life and then quality of life, hopefully. And on our side, along the way, if we get a group of people like this, we're pre-buying all these services and we get a cut of everything. So we're making profit too on the business side. It looks like a rosy scenario. It just looks like a rosy scenario. So first of all, when you look at it, and we've talked about this before, Louise, it's like, okay, well, are you going to trade all your privacy? All of it? Like your guts? Giving someone your DNA is giving them their guts. And today, giving someone your DNA is like slicing yourself open top to bottom and opening yourself to them. And then the rule usually is like, oh, by the way, we have all this stuff and we're going to rate what we know now and then everything else we know in the future. This is why I don't have a DNA sequence of myself in some database, is that in the rules, they don't say we're going to do it for good or use it for good. They say we're going to use it for good. And then in the future, if we find something else out, we'll do something else with it. But they don't really say what they'll do with it. The terms and conditions aren't very good trade. And they certainly weren't good 10 years ago. Now I'm just reconsidering that because there's some offense. If you know your DNA and share it with your health provider, it's like a really good chart. So what we're getting to is like really bad things could happen. Like you get the phone call, just like in that risk situation, please don't go to Colombia. It'll be like, the phone call's like, oh, you have no insurance anymore. You're canceled like a house in Florida. And you wake up in the morning and you go like, blink, blink, but I get all the, yeah, we got new information now. We found this little sequence here. And the fact that you're too skinny means you're going to die. And we don't insure those things because it'll cost more for everybody else. You hang out your teleprompting device of the time because you tap your ear because you turn off your phone and that's it. You're out. You're out. In community in the world, we kind of don't like that. We like this idea that everything's fair. But then in the individual community, people that really focus on the individual, they're like, I don't care about fair. I care about my rates being low. And I don't want to be considered against the body. So insurance, the way insurance rates get low, we spread the risk across everybody. Flip side, when you get perfect information, so AI may lead to perfect information. If I know perfectly when I'm going to get in my next car accident, right? So just by like something in the world, AI knows, and the prediction is like 98% if Rob gets into his Jeep in the driveway and drives somewhere, there's going to be an accident. I go to my Jeep because I'm just going to work and I want to go to the beach. I go to open the door. It's like, beep, beep. Oh, that's the insurance people. Rob, you can't drive today, but I want to drive. You're going to die. Why? Well, it's a 98% chance.
Like, how much time have I got? Like, who do I invite?
So what should I do? Like, what should I do? So we're seeing it. I remember we're seeing AI impacts. Here's one, Google, right? So I use Google Maps. I'm a Google person. I've given my life to Google in an extreme, like 7,500 photos, extreme. 22 million views of my photo on Google Maps. I'm always using Google Maps to drive and check where I'm going. So it knows. So I'm driving home and from the woods up north, and all of a sudden, ding, the sound that means the map changes. And this is 3 years ago. The map changes, and then, oh, you have to get off the highway. And you could actually literally see the Google people, because everyone who had Google was getting off the highway. No one else was. And then there's this stream of traffic going through the field of dreams of cornfields in Ontario. Left, right, small town. And we go around all the traffic and we dump back onto the big highway. This is giving your life to AI. That's a positive result. And I saved 2 hours of my life not in traffic. But you're absolutely right. They know everything.
So
don't make me laugh, Robert. Gina, what do you think about personalized insurance? I mean, we talked about personalized education. I
tend to be an optimist, and I tend to love the value that AI can bring. But I do worry about any entity owning every aspect of piece of data about me, because basically what they're doing is they're building a digital twin. They're building a digital twin of you or of their customers that can represent you without you being there, right? You see all the technologies are already there, the deep fakes, the video, the voice. Okay, so now you have the mannerisms, the habits, the DNA, the voice. You have what the person eats, what they buy, what they wear, where they go. You know, everything about this person. You could create a digital version. And I'm not saying insurance companies would you do and use that for anything, but what happens to that data if it's not secured? And someone with those intentions of creating versions of you, maybe you're a somewhat famous person, and you know, someone could leverage your likeness and your capabilities, what you know, what you buy, to create a fake you online, to do things on your behalf. That worries me. It's like, wow, you could make a me and do whatever you wanted, make me say and do whatever I wanted, and I could go to jail. So that worries me. I don't know what your thoughts are on that, Rob.
Well, of course, because I'm an insurance guy, there's insurance for that, Gina. It's called identity theft insurance. And I predict that the more we trade privacy, because of these edge cases that are possible, the more likely, instead of paying for another kind of insurance, you're going to pay for identity theft insurance, and it'll be a real thing. And depending on how much risk you take online, they'll say, okay, give me all your social accounts and give me your email and tell me about yourself, and this is your risk of identity theft. This is the good news. The flip side of every risk that I hear about, and then people that are way smarter than me about insurance will come back with, if you think of a risk, this is one bad thing that will happen. They'll come back with an insurance in a claim level that you will see the offer and say, okay, I'm going to take that risk now. I will climb Mount Everest. Mount Everest, crazy incident, right? Depending on the year, it's 6% to 10% chance of dying.
Wow.
Summit, like 6%. Like, can you imagine waking up in the morning? Hey, there's a 6% chance of dying if you do this, which involves a lot of steps to get there, right? I don't know about you, but I don't vote for that risk. It's too high. Even for me, it's like too high.
I agree.
Whereas getting on a plane, to jump on a plane for you to up from Joburg to London, 0.000001 risk.
Yeah.
Get on the plane, right? Don't even think about it. And then don't charge me for insurance, 0.0001 risk. And yet today you can go on an app and buy flight death insurance for the flight. It's the worst insurance you can buy.
Yeah.
It's not going to happen. Even if it costs you $25. Now, if it makes your stress level go down, and you have a propensity to heart attack and high blood pressure, buy the insurance. But you bought a different product. You bought peace of mind, and the insurance company beats you on the bet. I walk into a place like the World, and it's, have you ever been to Monaco or into Paris, one of the casinos, or the casino in Las Vegas? That's how I enter the World. That's what I see around me. Ding, 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 bing, 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 roulette wheels, 21. There are bets I make and bets I don't. Of course, I buy insurance. You can't be a business person in Canada without insurance. You can't live, have a car without insurance. So that's like, oh, that's boring. That's not, but there's some exciting things that I do. Hedge risk, like when I buy a surety bond, in order to do a piece of business, it's so risky that there's three-party risk that has to be handled. That's the big table. That's back of that. That's James Bond level, old school risk. But that's me.
But you can still buy that insurance. I mean,
absolutely,
it's at a premium. So, Rob, I've got a question around insurance companies and how enabled they are by AI right now. I mean, there was a report I was looking at the other day. It was dated 2021, Deloitte. So, of course, pre today anyway, everything's moving so fast. That said that I think 1.33% of insurance companies had invested heavily in AI. And whereas, the software industry had invested something like 20, 35%, something like that, I forget the numbers, but it was a market difference. Do you think, has that changed today? Do you think, I mean, of course, with the pandemic, we saw a major shift into digitization, but, in terms of AI, has it shifted? And can I add something to that question? Because there's another piece to it. So where does blockchain come into all of this? We've got these, massive risks to the, the individual in terms of all of our personalized data living somewhere in relation to insurance. Are insurance companies, does it benefit them to move things onto blockchain, to secure that kind of data so that the individual still holds the data?
Great questions. Great questions. I'll separate it into two things. So we'll talk about blockchain separately from AI, although there's an interrelationship. So our insurance companies investing in AI at the rate of software companies? So yes and no, it varies. The newer the insurance company, the smaller the insurance company, the more likely they're investing. And if you think about an insurance company, like what it is, like it doesn't build houses, it doesn't do anything tangible. It actually creates contracts, future contracts that are bets that there'll be claims or no claims. It collects money and it processes claims. So there's three constructs. They all have databases associated with them. So there's software. And it is true at the beginning of the advent of mainframe computing, insurance was one of the first businesses to invest in mainframe computing in advance and alongside the military. That's how fast it was adopted and technology was adopted. Now, the flip side, there's technology adoption in insurance all the time. Insurance is inherently about the avoidance of risk. And if you work in an insurance company in technology, there's a lot of people around you saying, we're not changing because it changes the risk. And in some cases, insurance companies are the flip side, and they don't invest in technology because what they do works. It's worked for 100 years. And I've literally been in offices where you look around and there's a museum you walk through to get to the offices in the C-suite. And they tell you, like, we've been doing this for 100 years. You go to Lloyd's, and we've been doing this for 300 years. What are you going to tell us this new thing, AI, what? So there's negative connotations. So the rate of change right now going on is quite high. 2 years ago, AI was fancy and you wouldn't really think about it very much. It's much at the edge. In 2018, I know that in 2016 and 2015, I upped the ante in my investment and time I spend in artificial intelligence because I knew that it was settling down and it would be applied against large-scale banks and large-scale insurance companies. So that's how far back I started, like, wait a second. So I got to start going to conferences, start writing papers that were short, start presenting things like, Rob, slow down, that's science fiction, that might not work, show me the proof. There was no proof. Roll the tape forward, now I'm seeing some of my clients and some of my programs where default is like, we're starting with AI, we're doing it now, we have to roll. Now, remember what I said, that all insurance companies are also software companies? So some insurance companies will do nothing and they'll be using AI. Like today, if you use Google search to do anything, and I know for a fact there are insurance companies that when you call them and buy home insurance and they ask you about your house, they go to Google and they look at their house. And when they ask you if you have a pool, don't lie. If they ask you if you have a pet and you say no, and there's clearly a doghouse in the Google photo, don't lie. Because they're looking. So that's AI to get to that level. So they're using a lot of AI more than you'd expect. And then even if they do nothing, they end up using AI. Like if you buy any software today from Salesforce, Microsoft, Google, and you use that in your operation, well, you're using AI, you're just in denial of what it is. And maybe you should be. What do you care how the algorithm works as long as you get a good customer service event? So I would say that right now I'm going to track along that everyone is increasing their investments in AI by 30 or 40% wherever they work. If you're Lemonade, a brand new company, yeah, you were high before, now you're super high and your costs are going down. If you're a company called, I'll pick on one, Motorists, very old school company, lovely Midwest company, 100-year-old company, makes money, knows how to do insurance, they'll never do an AI program. But one of their vendors will show up and they'll have this nice way of doing customer service, and it does customer service, and they'll show proof and evidence, and they'll adopt that software because they'll just see it as buying software. I think that in 3 years, we're not going to talk about AI anymore. We're just going to talk about software. And do you use software to do your business?
Rob, how does that affect the insurance workforce? What do you think the future career of a person that does underwriting or claims, like how does that look if AI becomes a tool that's, does it faster, maybe with less errors, does it around the clock, different languages? How do you see those people, shifting in their careers?
Winners and losers. One of the crises going on in the last 10 years in insurance is that insurance got old. Demographics. People don't want to join the insurance company. When I was recruiting people into software companies that worked in insurance and banking 20 years ago, it was exciting and people wanted to do it. When you're up against YouTube and X and gaming companies, like there was no gaming companies when I started in my career. That was not a choice. It's weird around the edges. Now it's a choice. And when you're trying to recruit a hotshot computer scientist and she's brilliant, and her offers are from Google, Facebook, and Activision, like come into insurance. So there's a crisis. So one of the things that AI will support longer careers. Easier to do, easier to learn, take advantage of your wisdom and knowledge. And that's good. It'll also, on the underside of it, better training. So people can enter into an industry and better training will grow. So there'll definitely be a shift. Will there be jobs lost because of AI and AI constructs? In the next 3 years, there will be no jobs lost. Insurance companies are inherently risk averse. They grow a certain way. And if in the case where an insurance company is growing, so it's growing, it's working, all you'll do is you'll say, we're going to expand into insurance in Florida. We couldn't entertain the detailed underwriting we could before to actually have a good business there, but now we can with our workforce. They won't grow as fast, but they won't get smaller. If you're losing, if you're a bad insurance company, you're out of business. Those jobs will be lost and they should be gone. Bad insurance companies are bad for everybody. It drops trust in the marketplace. When an insurance company fails, it's a crisis of trust, not computing. So I think overall that jobs will get better, jobs will be more interesting. There will be humans in the loop for the rest of my time on the planet and probably 2 decades after that. But eventually there'll be a very, very small risk management company that you'll pick over insurance. And that'll be their problem to deal with in the future. So you'll choose to pick a risk management company and live that way and never buy insurance. That'll be your bet.
I love your future, Rob.
Oh, never buy insurance. That means insurance companies listening to this, get into the risk management business.
Yeah. Okay. So that's at the tip of the moment. So before we go, Rob, this question about blockchain.
Yeah. Okay. Oh, sorry about that. Yeah.
Because I think that, certainly insurance companies are doing, with the rate that things are moving and the type of fees. I mean, you talked about of course, satellite imagery of your garden and, knowing whether you've got a swimming pool and how many pets you've got and how many children running around, or whether your gates are always left open, or all of the, if you've got a security system or an electric fence or any of the other, depends on which country you live in as to how common that is, I guess. But, and all of the other feeds of data, including the scenario that I painted with this company that is already doing all of this and very well. It's a highly attractive proposition as a consumer. But at which point do we serve people, and protect the individual's data or allow them to control their data? I'm not seeing any shifts there, at all. In fact, I haven't heard of anything that has moved in that direction around insurance.
Yeah, I'm seeing some similar signals. I think there are a couple of reasons for that. So in insurance, when I was looking at the evolution of blockchain, especially when Ethereum did smart contracts, my light bulb went on right away. Smart contract, all insurance policies are contracts, and this is a low-cost way of managing contracts and distributing work to do it. So I said, okay, well, that's going to happen. And I was in a set of places where people were asking me, like, what are the use cases for using blockchain to do things? And I said, well, if you're using Ethereum or some shard, you would use it to manage policies and build a policy admin system based on blockchain that was distributed, so there'd be no core policy admin system. So have people either self-insure that way or build contracts that were complex, that had full visibility. That's the magic of blockchain, is the transparency. In the trustless environment, when you wrap it into private use, it's very intriguing to spread this all out. IBM jumped in with their private blockchain, and they're doing experiments now. If you look at use cases in insurance for blockchain, you'll see some famous companies show up, but nothing is blown up. And there's been no startup, to my knowledge, that said, okay, we're going to do our core systems based on this technology. Now, a couple things, right? Does it scale well? Once blockchain gets big, like at the scale of a major insurer covering 20 million people, it doesn't scale that well. And you need to be able to do things in the moment in insurance, like satisfy a claim or not. It has to happen in a moment. It can't wait 2 or 3 days to settle. So that kind of thing is a challenge. And then the fact that the cryptocurrency side, it's just a lot of noise. If cryptocurrency being illegal in countries, like there was a time where people would ask me my advice. So, Rob, can you help me buy crypto? Do you buy crypto? I was like, no, because I work for these insurance companies and it's illegal in Canada and it's illegal in the US, and I can't do illegal things based on ethics, number one, based on the way I work. Like I am asked about, can I do this? Is it legal? So there's a bit of noise. There's been heavy noise with fraud and problems. And I in rooms saying, well, if there's fraud and problems with Bitcoin or Banana Coin or Dogecoin, which is a maniacal thing, right? These non-coins are literally Ponzi scams on steroids. They're very dangerous. So if you're in a room with people extremely experienced in insurance, and sidelong, if that stuff uses blockchain, you just get this sidelong, well, that's bad for this. And even I go like, well, you're not really using the coins for that. Like it's very different. It's all private and it's really successful. They're like, well, we'll wait till it's legal. Good news, Louise, now, especially with Bitcoin, lots more legality going on. I can open up a Wealthsimple account in Canada. I wouldn't open a Binance account in the States right now, but it's more stable. But even then, did you see the latest news? If you didn't see the latest news on wash trades, have you heard about this wash trade thing going on? So a study was done, and in Binance, they indicated that 70% of the trades going on using Bitcoin and other popular coins were false trades. Trades just run up the price, 70%. And then they said, well, it's like, oh no, yet the next scandal. And then if you're involved in anything in conservative places, if you're in a bank or an insurance company, it's conservative, even if it's 3 buildings over, they're like, well, we can't use that. It's got the name blockchain. And then they'll say something to our teams. They're like, can you prove that bad things can't happen?
Yeah.
With the same technology. So that's, it's like,
You're making a really good point, because I think that definitely, the whole money side of things has definitely shifted people's perception, and it's such a shame, because
Yes.
the use of blockchain and the ability of AI now to feed and to retrieve and all of the kind of automated stuff that would be so useful. I've got a friend who's a lawyer who's been involved in building insurance, so that's what she specializes in.
Yeah.
And she's been looking at putting the plans for buildings into blockchain. Simply because, of course, if you're trying to get old plans, old boundaries, old systems, old, all of the services that feed that property, there's not a lot of accurate stuff out there. So she's been impressed for the last 5 years, and it's quite extraordinary, the service that she's providing. But yeah, just from a very human perspective, which I guess is always the major concern, is if things are shifting in this way, then if any insurance companies, well, I don't know if it serves insurance companies to have things work in this way. I mean, that's if it did, they would, right?
Yeah, good point. I just I'm not, although it's like I'm uncertain, I'm just in my radar. And it's a really good point to say, like, I believe you're absolutely correct that blockchain has applications in insurance. Like, you've sensed the technology, you see it, you're getting signals like I am. I'm just pushing it further out. And then your other instinct of like, well, AI, if it's AI combined with blockchain, will that settle things down and make possible? I think that's true. I'm just pushing it out a couple years. Like tomorrow, the next day, and the next day after, I'll be in meetings with people who say, well, Rob, what are 100 use cases today for generative AI from Microsoft that we can use? That's specific, right? Whereas blockchain is like, we're talking about it, and then the risk level has to go down. But I think the likely scenario is that more agents will occur that run on blockchain to make sure that the assumptions about good actors will occur. There's a company based in Toronto that has built a private blockchain just to satisfy supply management trading on multi-point blockchain, where a bunch of supply chain partners, so think famous retailer, big famous retailer, all their suppliers, they're a big buyer. And then so all the trucking companies, all the shippers, all the handlers are all on the same blockchain. So in your imagination, it's like, wow, it will all work. Nothing will get lost. Everyone will know that the ledger across all these third parties will work, and there's no interfaces anymore. There's no interface between my inventory system and yours. We all have the same look and view. Fantastic. So I tried to get into that network, and it's a big, vibrant network, to try and add in insurance, because there's always risk. Even if it's perfect information, there's always risk. And then you'd be willing to pay low-cost insurance, and I could get micro-insurance running in that. I could not even get the attention of the blockchain people.
Interesting. Wow.
So it's difficult wolves when they overlap. But that's a really
it needs a sort of shock to the system of sorts before people actually look at things.
Yeah.
Yes. So it almost sounds like it's not really a technology problem. It's humans' trust, right? We're not feeling that it's trustworthy enough to put our eggs in that basket yet. So, Rob, are there other technologies that are online or coming online that could augment AI and things like blockchain to make systems work better, that are maybe more trustworthy? Either it be IoT type stuff, or if it's 5G or the next generation, with security in mind and a little bit more checks and balances to make people feel, a little bit more trustworthy of some of these emerging technologies.
But in the broad scale deployments, it's hard to take every person and increase trust, especially when there's technology involved that is known and unknown. So in smaller places where people are garnering investments and they have that attention, I think big companies that have lots of investment attention, there's areas. So around AI software, I start drawing out ideas of different kinds of hardware that supports that kind of software. Collection of data is a big thing. So I think about communications and I think about sensors, super important. And then sensors are just the sensor technology, the Nobel Prizes that will be won by people who do sensors, like little tiny sensors, nanosensors, sensors like that are happening now and available that are in pill form. So you're not getting someone sticking a tube down your throat anymore. You're swallowing a pill and you're letting it go through your gastrointestinal tract, and it's mapping and thinking about anything. It's not dye anymore. It's a computer that's really mostly sensor, and it's collecting things. It's not, sometimes they give feedback through your body and sometimes they don't until they collect it afterwards. So sensors, that type of thing. There's a new type of material one of my friends is working on that is, looks like a tensor bandage, but it's a full bore wearable collection device. So if you've got a problem with arthritis, you don't go to the doctor and they don't work with you for an hour and then do a scan. You wear this bandage on your knee 24 hours a day. When you go to your doctor, it gets that information. So they can see the inflammation in and out. So full information. So those sensors are big. Communications, 5G. Everybody should do work on primers around 5G. 5G is really should be called 10G. It's so scary that people, well, even when one of the transformers on top of a telephone pole blew up in my neighborhood, I was wondering if there's weird shit going on.
No.
So
Conspiracy theory stuff now.
This is the indicator, usually for me, that when things are going really, really well in technology, conspiracy theory goes up. I'm like, oh, I should find out about 5G because people think it's crazy. So I go into it, but it really is zero latency, massive bandwidth trade of information. And you put 5G driven into a Polestar automated vehicle, and yeah, you've got level 6 reality going on. That level, better example is Waymo with LiDAR. That whole cube is going to the data center in real time.
So
5G.
if you're talking automobiles, then we're talking how that fits into insurance is, well, cars that have these cameras and sensors and this data that they're pulling in real time can probably avoid more accidents and find better, safer routes.
I think they won't get it. I got into a big fight with an analyst in 2015. His name was Barry. And I predicted that with full information, like 5G, low-level satellites, cars with all the sensors in the right places, full information. They know about each other. The cars know about each other. They know about the road. There's no accidents. Therefore, there's no insurance.
Yeah, I can see that.
So I know some of the largest car insurance companies in the world, starting in around 2012. If you were majority car insurance, you were building another line of business.
Well, aren't car sales?
But the rates didn't go down.
Going down.
They're not. Unfortunate things going on. One of the reasons that car insurance has not gone down is because of attention problems. And unless it's a fully automatic car, people have these $50,000, $100,000 cars, and they play with their phones and they drive into things. A windshield used to cost $150, cost $50 to make. You know what the replacement cost of a windshield on a Mercedes is these days? Between $10,000 and $15,000.
Why?
Because sensors.
Right.
And I think that there's a big problem. My prediction is that sensors, just like the sensors in your body, they're all at the edges. 10 fingers, they're at the edges. There's redundancy. Cut my finger off, got 9 more. Right? That's just human biomimicry. Like, if we had sensors on our bodies like cars do, we would be damaged all the time. We'd be in the hospital all the time. When I bang my finger, I would go to the hospital. And now you just put a Band-Aid on it. So cars have to be more resilient. The idiocy of putting so many sensors at the edge and so many computers in bumpers, they're called bumpers. Why are there sensors in bumpers when you could just put a fiber optic cable that goes to a sacred place in the middle, like your heart and brain, and you protect it? This is the biggest bone in our body, right here.
Yeah.
That's
you're making me think of these personal like airbags that I've seen popping everywhere. So you've fallen that, everything pops, which is great. But maybe it would just help if we sorted out Alzheimer's and ALS and all of the other diseases that deserve some investment in. But,
I think this is I'll talk, so go back to big picture, and as we wrap up here, I think that the call to action now I'm seeing in software on a regular basis, that we're all saying, hey, let's do more serious things. Let's not big toys anymore. Let's not addict people to those short videos. Let's apply things against Alzheimer's. Let's increase our quality of life. Let's reduce the cost of insurance for everybody. Let's not be biased. Let's make that challenge. Instead of going into a company, and I've been in those rooms where, and some of the small companies that I advise, I had to add a practice to my business called ethics, where literally I would tell the startup teams, like, no, you can't do that. So yes, we can. We've got AI now. We can just generate it. It's like, but it's wrong. What do you mean? It's wrong. Well, it's not against the law. Okay, so you have the capability. It's not against the law, and you want to do this that'll reduce the quality of life of people. What are you doing? Stop this. So big picture, let's do serious things with technology. Let's take it on as a challenge, like we take on nuclear power. You all got a lesson in the last few weeks on nuclear power again.
Yeah, it's so interesting. I sometimes think that, in order to set up a company, we should pass some test, some ethics test of some sort. But then again, who's the judge? And that's, of course, what makes it all so terribly difficult and so nuanced. And,
I'm always hoping for enlightened despots. Again, I'm always hoping for it. But what's enlightened?
Well, exactly. And, who's to say, Gina, your thoughts, your last thoughts.
Well, I love where Rob ended it with ethics and there being more of a need for that. And I think that as we delve into future guests, I would like to take that as maybe a next step, especially when we talk, go back to education and we think about the focus on STEM education, and we're losing the focus on some of the humanities, and ethics is a big part of humanities. So if you stop teaching humanities, there are no ethics. And then you get people that Rob encounters where they've just studied engineering and technology without any kind of other, how it affects humans, how it lives in the world, anything. It's just, here we can make this technology, why not? With no thought. So I think where I would like to leave it is, I love what Rob said about ethics, and I think we should dig into that more as AI takes on a bigger role in our world. And I think if we can do that, then we have the best of both worlds. And I'll leave it there.
Thank you, Gina. That's such a great place to leave it. It certainly opens the door into something so much bigger and so much richer and hugely nuanced. And I'm looking forward to picking that up in the next chat. Rob, thank you so much for joining us. It's been an absolute pleasure and rich and insightful and interesting as ever. So thank you.
Thanks, Rob.
Guys. Excellent. Enjoyed everything. Thank you so much for sharing your time with me.